Good evening, everybody, and welcome to The Smart Investor. This is Metropole TV. I'm your host, Ali Khan Satcher. It's a pleasure to be with you this evening. We got a great guest in the second half, so I'm going to cut my first half short. We've got Mr. Odundo, who's the CEO of the Nairobi Securities Exchange, and we're going to have a wide-ranging discussion about the derivatives market, about the stock market performance, about the incubation program. There's a lot going on, so I'm really looking forward to that conversation. We'll get to that momentarily. But let me start with a quick roundup of what's happening at the moment in the world. Let's start with Kenya. Petroleum products imports were 344.8 billion shillings through April, 12 months through April. The previous 12 months, it was 299.6 billion. And the point I wanted to make here is essentially this is our single biggest expense item. This is the check we've got to write every month in order to power our economy. You can see that it's risen, not hugely, but more than 10% year on year so far. And just to give you some extra flavor, diesel consumption went up by 3% in those 12 months compared to the similar period. Super petrol was up 12%. That's interesting, isn't it? It's normally a very good proxy for how the economy is doing. And as I said, single biggest expense item for Kenya Inc. And I just wanted to show you this chart. I know it looks quite noisy, but it shows you the oil price trend has been in an uptrend since around December last year. Then, of course, we had all that pressure being put on Iran, which lifted prices. And Venezuela, of course, has had its own challenges. And you see that the price has actually dropped quite sharply in the last few days. That's all about the trade war and concerns that this trade war escalation is going to slow down demand for oil. We clearly want a lower oil price, so we got to write a smaller check every month. But the trend is your friend, and you can see what's been going on. It's been trading in that band. That's quite a bearish sign when you see it drop out of that parallel line. Expectations were that we would drop much further, but we seem to be in this $58, $59 a barrel range for now. Big announcement out of Africa. This is whilst everyone else is fighting about trade zones and there's this regional fragmentation happening. Africa, and I'm so pleased about this, this is our Africa Continental Free Trade Area, comes into force on paper today. It required 22 countries to ratify the deal. That's been done. Once it's passed, all 55 nations recognized as part of the AU are expected to be a part of the free trade area. 1.2 billion Africans, combined GDP of $2.5 trillion. And I, for one, believe our people are entrepreneurial. If we break down the borders, I think there'll be tremendous opportunity for our people, not only the big corporates, but also for the people who like to trade across borders. You know, if you go around, I remember a friend of mine telling me, if you go around communist countries, you don't find any markets. He said, go around the African continent and there's a market everywhere. We know how to trade. So I'm really bullish. I'm hoping this will really unleash our economies. And I estimate if we really break down barriers, we're going to see about 2% added to GDP. Ronak Gopaldas said this is a technocratic agreement, aspirational in nature, direction is positive, translating what has been agreed by the technocrats and policymakers into stuff that has a material impact on the ease and cost of doing business and fosters more integrated markets remains to be seen. Look, it's never going to be easy. There are lots of people who are benefiting from the current system. But if you really want to get this African economy motoring, this is a silver bullet. And I really hope that we see further traction. Nigeria so far has been digging their heels. They've been a little bit slow on the draw. That is an enormous market, but we're expecting them also to fall into line. Let me turn to Zambia. This gentleman is Mr. Agarwal. He owns the copper mine in Zambia, which is being taken off him by the Zambian government. And he took an advertisement in the government-owned newspaper, and in that he issued a warning saying as a personal message to the citizens of Zambia, as he's trying still to meet President Lungu, has not managed to meet him. And he said this: the current position can only hurt the country's hard-earned democracy and investor-friendly status. I see a lot of mining companies looking to exit Zambia, despite there being huge potential to develop downstream industries. There's been much more resource nationalism. That's the idea that countries are not getting a fair shake of mining. This is what President Magufuli's been complaining about with Acacia Mining, whom he's no longer talking to. He only will talk to Barrick Gold. But the problem with taking this approach is that it creates a lot of panic amongst investors. And that panic can be seen on this Eurobond yield, which is the Eurobond yield for the Zambian bond, Eurobond, and that has gone over 20, it's at 21, 22% now. It's now at 21, 22%. Let me show you. This is the yield, the spread over US bonds. It's 2,000 basis points above. You see how it's gone up? It spiked here, it then rallied, came all the way down to nearly 300 over. Today it's at 2,000 over. The only other bond in the world that's trading cheaper than Zambia, guess what it is? Venezuela. And Venezuela has defaulted. So what this is telling us is that the Zambian markets, they cannot come back to the capital markets at the moment. The market won't give them a shilling or a dollar. And therefore, this is a clear stress point correlated to the grab of Mr. Agarwal's copper mine. And I think we've got to keep an eye on Zambia. And it's very difficult to see where this goes next. It seems to be at complete loggerheads. Another interesting article I came across saying, is this a sign that an increasingly desperate government, starved of resources to pay the salaries of a burgeoning civil service and of cash to meet the international debt it has rung up in record time, is thinking of nationalizing the mines? After all, Zambia has been here before, and it did not, I'm afraid, end that well. In 2005, Zambia's debt had been largely forgiven. Today, the country is more in it up to its eyeballs. External debt at the end of 2018 was $10.1 billion, $3 billion in Eurobonds, $1.8 billion multilateral, $2.9 billion from China. And they've so far been trying to avoid doing a deal with the IMF, but you've got to look at what Ghana did. If you don't negotiate with the IMF, other investors can't typically get behind the country's plans. So I think they're going to have to bite the bullet at some point, but this really is an extreme situation now. That kind of spread really is unheard of, and it tells us that the country's in distress, second only to Venezuela, as I said. Turning now, this is President Lungu in the time of President Zuma. And as it says here, it's hard to read the president's endgame. No one knows exactly what the endgame is. They're going to take this mine back. Are they going to sell it to somebody else? They're saying there's a lot of interest. But, you know, that kind of interest in that circumstance is going to be difficult to find, because, you know, you can imagine somebody going to saying, I want to put $1.5 billion into Zambia right now. You can imagine what the board is going to say to them. They're not going to be that keen on that kind of risk, I don't think. Emmanuel Macron, who's seen here driving President Kenyatta in the Peugeot. Do you remember that they're assembling this Peugeot here in Nairobi? My father had a 504. What an iconic car. And I still sometimes find those 504s driving around Nairobi. They're really a top quality car for Africa. But essentially, Macron is betting on startup Africa. France is going to invest 2 billion euros into African startups over the next 3 years in a bid to unlock the continent's untapped potential. Africa's the continent of entrepreneurs, say the organizers of Choose Africa, which is this program of theirs. French-led initiative has pledged 2.5 billion euro investment into 10,000 small and medium-sized companies by 2022. Very bold program. If you are in that space, you should be getting in touch with them because they have got quite a bit of money. This is a place I visited. This is in France. This is called Station F. It was an old train station which was derelict. They converted it into the world's largest startup incubator in the world, and that speaks to his thinking around the startup opportunity. Macron said, I want France to be a startup nation, a nation that thinks and moves like a startup. And certainly he's expressing those thoughts when it comes to how France is re-engineering the way they deal with the African economy. You know, they've got a long history in Africa. France Afrique was their mode of operation, and he's really trying to disrupt that old French model. Coming to South Africa, President Ramaphosa selected his cabinet. This is the second cabinet to be 50% women after Ethiopia and Rwanda, so that was a good statement that came out of there. It's Africa's third gender balanced after Ethiopia and Rwanda. Tito Mboweni, South Africa's finance minister, was reappointed. The markets will like that. He's a very popular fellow and very witty as well if you follow him on social media. Ramaphosa said he was reducing a bloated cabinet to 28 posts from 36 and merging ministries. And I take you back to that speech that he made a few weeks ago when he quoted Ben Okri, and he said, we dream of a new politics that will renew the world under their weary, suspicious gaze. There's always a new way, a better way that's not been tried before. He reappointed David Mabuza, who's been implicated in a string of scandals, but the market overlooked that appointment and were constructive about Tito coming back, Tito Mboweni as the finance minister, very popular with the markets. And essentially, this is the rands before, this is one other thing I wanted to show you. This was South Africa's GDP. At one time, it was much, much higher than the average of the BRICS. That's Brazil, Russia, India, and China. And you can see that since, what period is that? 2007, 2008, completely coincident with President Zuma, it's really underperformed. And what this is about, what Ramaphosa's got to do, he's got to get this curve, instead of flattening, going up and overtaking the BRICS and the rest of the world once more. And that will be a big push for Africa as well. The Rand, which had been tumbling and nearly traded over 15, that was on worries about the trade war, and South Africa's correlation with China has improved. As you can see, we got as low as 1465, and that was all about the cabinet appointments and about the market reaction. I think the market was very worried about what he was going to do, whether he was going to pull the trigger and make things happen. And I think on balance, the market thinks he's doing exactly that. So the Rand better. Let's see over the next few days what happens. I wanted to show you this. This is the European bond yields, 5-year bond yields. The only bond in Europe that's paying interest, positive interest, is Italy. All the rest, whether it's Germany, France, everything else is in negative interest rates. It's such an unusual situation. It doesn't happen frequently. It happened in Japan a few years ago, and Japan yields have stayed negative. But we're seeing that infection from Japan spread in Europe. It's really a quite incredible occurrence. It basically means that Europe can borrow as much money as it likes at negative rates, which means they don't have to pay you anything. You're going to have to pay them something. Let me turn to this. It was very interesting. Mexico has overtaken China in the space of a few months as the biggest, as a bigger exporter into the United States. And this is surely a consequence of the trade war. As tariffs were imposed on China, Mexican exports have been meeting the gap. And essentially, I read an article saying a lot of Chinese exports are very replaceable. And that's what you're seeing. You're seeing Mexico replacing China in terms of exports into the US. And that's an interesting development, not just avocados, of course. Robert Mueller, the special investigator, the man who's been hounding Trump, or at least Trump believes he has, said there were multiple systemic efforts to interfere in our election, and that allegation deserves the attention of every American. He also said, if we had confidence that the president had not committed a crime, we would have said so. That was pretty hard-hitting, those two comments. And there is no doubt in my mind that President Putin interfered in this election and helped President Trump win. It didn't take much in those marginal constituencies to move the dial sufficient for Trump to win key constituencies. And I think it is basically proven that that's what happened. Let me now go to a final point, which is about the Europeans. This is Federica Mogherini. She was trying to create a special purpose vehicle in order for the Europeans to help the Iranians sell their oil. The Americans have now put a stop to that. They said they wrote a letter to the CEO of Instex, who was creating this vehicle. I urge you to carefully consider the potential sanctions exposure of Instex. Engaging in activities that run afoul of US sanctions can result in severe consequences. This was her plan. She visited President Kenyatta last week, you'll remember, and she's been trying to facilitate the Iranians. But essentially, the Americans have said, if you do this, we'll cut you off from the US financial banking system. And really, the way the world is today, if you're cut off from the US banking system, you're kind of cut off from the world. And this goes to my point that the level of sanction warfare Trump has put on Iran is unprecedented. And I think if they can't do the Instex plan, the Iranians are going to run out of money very, very soon indeed. They haven't been able to sell much oil. It's debatable how much. Once upon a time, they were selling 2.5 million barrels a day. Today, they're selling apparently 400,000. I don't know how they're even managing that. This is the first half of the Smart Investor, Metropole TV. This is Ali Khan Sachu. We look forward to speaking with the Chief Executive Officer of the Nairobi Securities Exchange, Mr. Odundo, about yesterday's announcement regarding the derivatives market, but there's much more to talk about. Come back after the break, join us, and be a part of the conversation.